Our guest says that Russia's announcement, following through on threats of a 5% cut in production, will be felt at the gas pumps. Let's bring in Roger McKnight, Chief Petroleum Analyst at Enpro International. Roger, thanks very much for coming on. Of course, there's a lot of theatre in pronouncements about oil production, but Putin does seem to be following through on that threat. He said, I won't stand for price caps.
Yeah, we'll see. That's good. That 500,000 barrels a day cut, he's calling it in March. He could change his mind and reverse it in April. So I think what the traders in the market is saying, well, let's take a wait and see attitude here. Let's just see how this thing really rings out. Well, if you look at the market today, insofar as gasoline prices are concerned, you have a downward pressure, you have an upward pressure, and something in between with no pressure. If you look at straight supply, the supply of crude, gasoline, and diesel is all in positive situation. Yet if you look at demand, demand has fallen for gasoline and diesel. So if you got supply up and demand down, then prices got to go down. Then you look at the refining situation. Refinery runs are running at 87%. I'm waiting for that to crash and prices to go up. But again, right now they're at 87% and prices are holding firm. Then we have the mysterious Russia situation and the Saudis boosting prices to their Asian customers, and President Putin doing whatever President Putin wants to do this month. So everybody's sort of scratching their head and trying to see what's going to happen. My crystal ball all got fogged up.
Give us a look at gas prices in the week ahead in Canada. Start off in Western Canada, if you would.
Sure will. Vancouver and the lower mainland, I'm looking up going up 3 cents to $1.87. Calgary or southern Alberta, if you wish, up a cent to $1.27. Don't forget they have that 13-cent holdback on their taxes. Regina and Winnipeg, I'm not seeing any change at all. That's a very mysterious part of the country at $1.48 for Regina, and Winnipeg at $1.53. That's quite high.
Why, so, Roger? Sorry to interrupt, but is there usually such a big gap between, say, Regina and Calgary?
Thank you for asking that question. When I look at the retailer margins for Manitoba and Saskatchewan, they're exactly twice as much as the rest of the country, and that's the reason for the stubborn price situation they have there. If I was resident or consumer in Saskatchewan, Alberta, I'd be knocking on the door of the oil company and say, what's going on here? Because the retail margin of 18 cents, that's a gross margin, versus an 8 and 9 in the rest of the country is sort of a mystery to me.
And then in the eastern part of the country, there's Toronto, Montreal, they're paying a premium in Montreal, aren't they?
Yes, that's a lot to do. I think it's a lot to do because they're based on Brent pricing, whereas Toronto and Southern Ontario it's a blend of Brent and and Western Canadian Select. So that's quite a difference there. But their tax structure is unbelievable as well, in competition with Vancouver for the Olympics of taxes. And when you get into the Maritimes, I'm not seeing any change there at all. I'm holding it at $1.49. Again, that's a wait-and-see situation. So it's a coin toss, Andy.